Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com. It's Friday. It's the relaxed morning call. It's the little small one, a little late, so I just want to get right into it. Bottom line is, it's been, a decent week in the markets. Markets are trying to digest what's been a huge July, trying to digest what's been an unbelievable 2013, especially if you're bullish on equities, especially if you approach the market with a constructive plan. So the question is now, as we go through the rest of earnings season, which is dwindling down, okay, and it's getting into the dog days of August, what should you be doing? Should you be involved? Should you be less involved? Are there trades to, take place? And as of this point, this week, you could have made some money on the long side, the short side, and there's still a little bit of action. If you look here at the chart of the spiders, you could see a few things going on here. I think the question right now is, this was the low that we put in back in June after this 6.5% correction or 6% correction. Had a really nice, healthy move to the upside, and now we're somewhat in this trend, right? Here's this trend ever since, you had that Wednesday speech by Bernanke about the tapering. We've been just slowly, trickling higher, and this type of trend could stay in for a while, okay? We could continue to go, perhaps make new highs, for 2013, or the bears that made a stand yesterday kind of keep it contained, and then all of a sudden we break below this two-day pivot, which comes in right around 168.55, and then we see some type of corrective activity. Could lead to here, it could lead to the gap, or it could lead down to the 50-day. But as of right now, we have some levels. The bears want to try and keep a little bit of control. They should not let the bulls reclaim this 170 area, and if we're going to get any kind of downside follow through, they're going to have to close us below 168.55, for, I think, some welcomed downside action by both the bulls and the bears. I think the bulls would like to see some lower prices too, and I think they'd like, to take some time off and enjoy the summer, which has been very active with lots of opportunities. So the question is, where are those setups? And right now, they're kind of getting a little harder to find. Yesterday, real quickly, you had Tesla's earnings, unbelievable. Big gap up. You now have your doji. You have yesterday's low. If they want to try and come in and press it a little bit, that's your pivot for a little short. If they hold it here and we go sideways for a little while above yesterday's high, that could be, movement to the upside. You look at something like LinkedIn. It's been doing that for now 4 days where you have this little range here. Question is, can it break to the upside or does it need more time? So these are the type of things that we're starting to see. Yeah, you saw yesterday BMW, which had a similar pattern that broke out to the upside. Sideways is actually breaking out. If it were to start getting above, yesterday's high, perhaps it continues. It might need some time to now base above, the gap. They did announce a big buyback. As far as, some other things guys are watching, Facebook, it too, big time run. This is a type of pattern that's been paying some bills, is by getting a big gap up, digestion, crossing above that gap up high for continuation, and now it's trying to build a base above the 8-day. Question is, how long will it need to go sideways or perhaps come in a little bit before going again? And that's what we're seeing in a lot of these names. Sometimes there's a lot of movement, and sometimes there's just not a lot of things to do. Today there's news in BlackBerry that they might go private. I don't know. I'm looking at this chart. There's not much that I see here. Are they going to go private? I think they're the same odds of going private as Dell, and I don't think anyone's going to pay much for them as they're in a dwindling business. But here's your pivot. If it starts to get above 988, perhaps it could see this gap here of 10 and change. I personally think this is, load of what. It's just squeezing some shorts, getting some people out, because a lot of people got trapped in this range, not expecting a move from 14 down to where it is now. So it's just something to do. Also something to do, we had Microsoft, really nice little move here. Here's our lower area. I'm actually long a little bit, went long 2 days ago, and then it pushed into the gap, and now the question is, does it hold above like 32.60 for a bit, then get above 33.07 for more movement? I'll stay with it a little bit. As far as the ags, you're starting to see, move off this bottom. These type of ags have been crushed. You're talking about huge moves, from 65 all the way down to the depth here. So, for us traders, a little opportunity. I got long on this day when it looked like it was perking up, and a nice little day yesterday. It was upgraded today. We'll see what happens here if this gap pivot becomes an action area for more upside. If you're looking into some other ags, maybe Mosaic, look at that. It's already at that pivot, probably pushes into it. So some trades in the ags. CF really hasn't done much since the Loeb news, so at this point, I don't see much there. as far as Priceline, unbelievable. Crazy, right? This stock is now, I think, bidding or looking to hit the first, we might have our first $1,000 equity price, you know, and it's going to come from Priceline, somebody called William Shatner. But, you know, this is like a lesson to be learned, okay? So many people over the course of the last year or two have been saying, oh, Priceline's overvalued. You could get your tickets on all these other sites. Bottom line is, when the trends continue, and that's what this trend has been, very strong, you don't fight it. You don't fight it because of PE. You don't fight it because of valuation. You know, you fight it if something changes, you know, and you don't have to be long it, but if you're just trying to short this thing because you're like, it can't go up anymore, that's how you go out of business. You know, I heard the same thing with LinkedIn 2 years ago when they're like, oh, valuations are high, you're wrong, Red Dog, I shouldn't keep it in the drawer, you know, it's a 200 and change. Or I'm just saying, stocks that have the capabilities of being a 2, 3, 4, or 5 times your money typically are new issues from the past 2 years, and they tend to have smaller floats, high PEs, high valuations, and they have earnings potential. And then once those earnings potential come in, that's when, you know, the PE goes lower and it plays catch up and it comes more in line. I would worry more about the trend. Worry about if a stock's above the 21-day moving average for 6 months, it breaks below it, and it has a high valuation, then you get a little worried. But anyway, as far as some of the banks, a little wishy-washy here. You know, not leading, not really breaking down. I would say, you know, if we start to move lower, you'll probably see the XLF break this little area. Another weak spot has been the home builders. You know, at this point, at the bottom end of this range, you know, these are actually some old lines here, but you can see that this trend that was, I guess, here is continuing. And now you have some support. If it were to break below this, it could see the 200-day. And lastly, gold. You know, gold woke up yesterday. Potent move. You know, it's been kind of moving better ever since the blood on the street lows right here. You know, you had a little red dog reversal, quick move, higher low, and then now you have a pretty big trend line. Okay, here's a trend line that goes all the way up. Yesterday, you saw a nice gap up, and a lot of people weren't sure exactly why. It could have been the China data, who knows. All I know is that you have a wide range bar. If it were to hold, I would say at least half of it, there is a good chance that you get another move up to maybe 135 or a little bit higher. You know, so look at that. It's only down a little bit today. If it were to go green, maybe you get a trade there in the GLD. Silver also perked up, you know, pretty potent move, first one in a while. This is what we chose to play right here. You remember that? That was a nice little trade back in the end of June. Since then, it's been, you know, I would say pretty choppy. And then yesterday, finally, you know, it moved higher. Now you have a pretty big resistance area where this played catch up to gold real quick. If it were to consolidate a little higher and then break above, you know, this 1963, perhaps you get some more movement. So all in all, you know, we're in the second week of August, and you know, a lot of guys had a nice earnings season. If that's you, if you've been putting together a good summer on your P&L, you know what? Take August slow. Don't try and repeat it. Just try and, you know, be consistent. If you've been an investor and your stocks are doing well and you've also traded around them and added cash flow, you've been doing the right thing, because there's been a lot of great names making 2013 highs, historic highs. Lots of good reasons to love equities. And there are different times when they slow down, or they get faster, or there's times to do nothing, or times they're set up. This is one of those times where, you know what, it's probably not the most exciting time of year. So if you can, go to the beaches, have fun in the mountains, see your friends and family, and don't, you know, knock yourself out in front of your computer screen when, you know, before you turn around, it's going to be September and we're going to be rooting for our favorite football teams. Have a great day. See you over the weekend, or perhaps on the close.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.